Top business stories live from the Sky News City studio. A bigger than expected fall in retail sales in September as the warm weather put shoppers off buying autumn clothes. A boost for the Chancellor as UK government borrowing comes in £20 billion lower than forecast. Plus why the group behind the ChatGPT chatbot could be worth $86 billion, 3 times its valuation just 6 months ago. Good morning, this is Business Live with me, Ian King. Unusually warm weather last month led to a bigger than expected fall in retail sales. The news comes on the back of figures suggesting consumer confidence in the UK has suffered its biggest monthly drop since March 2020, the month, of course, in which the first COVID lockdowns were imposed. Well, the Office for National Statistics said retail sales volumes in September were down 0.9% on August. That came on the back of a 0.4% month-on-month rise from July to August. The fall was heavier than expected, with economists having predicted a 0.3% decline for September. Well, with me now is Simon French. He's Chief Economist and Head of Research at the investment bank Pamela Gordon. Simon, good to see you this morning. Difficult to disaggregate this. Is this the cost of living crisis biting, or is it the weather?
Well, it feels more valuable to have a meteorologist than an economist on this morning to try and disentangle retail sales. But it's often the case, isn't it, with that very sensitive data point driven largely, yes, by that warmer weather. And we're hearing a lot from the publicly listed retailers guiding to some pretty soft sales at what is coming at the start of the golden quarter, what they call the golden quarter for sales. And the fact that their autumn lines were launched into such a warm September probably was a bigger driver. But it wasn't the unique driver. I think if you look at retail sales over their longer term picture, and there's always a great chart I think the Office of National Statistics produce each month, which shows the divergence between the value of sales and the volume of sales, volume going down, value going up, that's inflation. And if there is a silver lining to these quite sort of dark clouds sitting over retailers, it's the fact that we are now seeing inflation easing in their supply chain, which should start to enable volume sales to start to grow going into Christmas.
Well, I mean, the other thing is, how do we reconcile these numbers with the fact that for the last 3 months now, earnings growth has outpaced the headline rate of inflation?
Well, I think there's the earnings picture, which is more constructive, but there is also the ratchet effect on other parts of the consumer staples space, and I'm talking specifically about mortgages and rents. Now, the lagged impact of interest rate increases, we've had 515 basis points of increases. We think now, the Bank of England officials think slightly different estimates. We think about 40% of that has crystallised thus far. There's still, therefore, the majority to come. And therefore, when you're talking about trying to square that data with real wages going up, you've also got to put into the equation the fact that that key staple that is so much of people's household budgets is starting to eat into their ability to spend on discretionary items like clothing.
Yeah, viewers will deduce from what you've just said that you're not in favour of another interest rate rise.
They would be correct in that assertion. I think you've got quite a significant lagged transmission of the interest rate increases still to play out. My own view, with a broader basket of indicators, both softness in purchasing managers' indexes, retail sales, sign this morning you mentioned in your introduction, consumer confidence, I think that is enough for the Bank of England to say when they meet on the first week of November that actually we need to see more data play out on the full transmission against the backdrop of a weak economy, which should pull down those core inflation fears that they've been worrying about.
Is it just possible that consumers are putting money aside now in order to splurge at Christmas?
It's certainly possible, and I think the ONS speculated to that point. Certainly some of the retailers we're speaking to have talked about that. Clearly, that protected spend, the sort of, even in quite difficult economic times, trying to preserve the magic, if you like, the excitement associated with Christmas, you are potentially seeing that. Also anticipating that there are some key, particularly from the online retailers, some key sales coming up in October, November, Black Friday and the other key retail events, actually putting some money aside on the expectation of that. And perhaps to just collaborate the anecdotes with some data, you're still seeing decent accruals of savings in the Bank of England's monthly data. It's not the excess savings we had during the pandemic, but still an accrual of savings that potentially households aren't just using for precautionary purposes, but storing up for events they may want to spend on, like Christmas.
Yeah, very good point. We'll stay with us, Simon, because it's a busy day for data today, and we have some more economics now. Meanwhile, UK Government borrowing again came in below forecasts last month and emerged this morning. The Office for National Statistics said today that public sector net borrowing came in at £14.3 billion in September. That was lower than the £20.5 billion forecast by the Office for Budget Responsibility. It means that during the first half of the financial year, the government borrowed £81.7 billion. That was up £15.3 billion on the same 6 months last year, but £19.8 billion less than the OBR forecast in March this year. Well, Simon French from Pamure is still with me. Simon, is this mainly because inflation means the debt on the interest payments on the national debt is falling?
Yeah, I mean, unlike the weather, there's been a blizzard of data, hasn't there, this morning with the public sector finances, and trying to disentangle what's driving all of that is quite instructive. You are absolutely right. The big line item that changed was the revaluation of index-linked gilts. That is about a quarter of the UK's £2.4 trillion national debt that is linked to RPI, the retail price index. Now, there was a quite considerable drop in the retail price index in September. Welcome news, not just for hard-pressed consumers, but also for the government in terms of its debt servicing costs. Now, that's brought the lagged 12-month run rate on how much the government spends on debt servicing below that quite symbolic £100 billion a year. Should that continue? Yes. Is that one of the reasons why borrowing is coming in year less than the OBR expected? The sting in the tail, and probably the problem for the Chancellor looking at these data, is he may have more money in year, but of course his fiscal rules, the thing that governs his tax and spending decisions, is taken on a 3 and 5 year view, and there's much less enthusiasm that there's spare capacity there to perhaps do tax cuts at the upcoming budget.
Yeah, I mean, inflation coming to his aid because VAT receipts were sharply up during the month, and also income tax up 1.7 billion year on year. I mean, fiscal drag, stealth taxes, it's working its magic for the Chancellor.
It is. He's not the only Chancellor to benefit from that. We've had a series of Chancellors over the last 20, 30 years who take advantage of inflation to freeze or to below inflation index those key thresholds. It also tells a broader story perhaps about the resilience of the labour market, and all these economic stories coalesce around the fact that that slowdown in the jobs market that many people associated with interest rate increase hasn't really happened. So we've still got pretty decent employment growth, a little bit of a tick up in unemployment, but overall that jobs market's still fueling income tax receipts, which is a welcome bit of relief for the Exchequer. Now,
the fact that the government's borrowed 20 billion less than the OBR was forecasting in March, you're going to get calls from backbench MPs for tax cuts. Is that likely?
I don't think it's likely, and certainly the Chancellor had been briefing last week in Morocco that there is very, very little headroom, if any at all. Will there be some jiggery-pokery with the fiscal rules, the rules that guide how much the government can borrow? It's possible, and indeed, I suspect both Tory MPs and indeed cabinet ministers would like to do that, play around with the public sector net debt rule, maybe even look at a public sector net worth rule. But the shadow of Kwasi Kwarteng and Liz Truss looms large of playing around with those rules and potentially spooking the markets which you've documented all week have been spooked by higher interest rates globally. Do they want to add fuel to the fire by playing around with tax cuts facilitated by changing the borrow rules? I doubt it.
Yeah, Simon, good to see you as ever. Thanks for joining me today. Bit of breaking news to bring you, and I wonder actually whether this will feed into the GDP figures for the fourth quarter of the year, because it really is a bit of a deluge in Scotland right now. The Met Office has just issued a new 24-hour red warning for Grampian and Central, Tayside and Fife regions of Scotland for tomorrow, right up until midnight tomorrow night. I think we might have a bit more news on that as the morning goes on. There is a lot of breaking news coming out of Scotland right now with that extreme weather. We'll come back to that later on in the programme, because we do have, I gather, a bit more to tell you within the next half hour. Some other business news stories for you now, though. And China announced today it was restricting exports of a key material used in the batteries that power electric vehicles, in what is being seen as a retaliation against US-led restrictions on technology sales to Chinese companies. Beijing said it would be requiring export permits for 3 grades of graphite in what it said was a move to protect national security. China is the world's biggest producer and exporter of graphite, top buyers of which include Japan, Korea and the United States. Intercontinental Hotels Group said this morning that it continues to benefit from the upsurge of travel and tourism following the end of lockdowns. The company, which owns the Holiday Inn and Hotel Indigo brands, said that during the 3 months to the end of September, revenue per available room, which is the key industry measure, was up 10.5% on the same period last year and up 12.8% on the same period in 2019 before the pandemic. Elie Maalouf, the chief executive, said travel demand remained very healthy during the quarter, during which IHG opened nearly 8,000 rooms across 50 hotels. The sale process for the Daily and Sunday Telegraph newspaper titles and the Spectator magazine was formally launched this morning. The titles, which are expected to fetch at least £600 million, are up for sale after Lloyds Banking Group appointed administrators in an attempt to recover debt owed to it by the Barclay family, who are the former owners. The Barclays are now seeking to buy the titles back, but they face stiff competition from a range of would-be buyers, including the hedge fund manager Sir Paul Marshall, the Daily Mail's publisher DMGT, and the former Mirror Group chief executive David Montgomery. And the head of the world's biggest fund manager has praised Sir Keir Starmer for moving the Labour Party away from the populism of his predecessor, Jeremy Corbyn. Larry Fink, the chief executive of BlackRock, told the Wall Street Journal he'd recently spent time in the UK with both the Labour and Conservative parties and had been encouraged by his conversations. He told the Wall Street Journal, "I'm very pleased to see how the Labour Party in the UK went from, I would say, an extreme party, Marxist leaders, to a moderate Labour Party." Well, back now to breaking news on the extreme weather conditions that we've been seeing in Scotland, and a 56-year-old driver has been killed near Forfar in Angus. A Police Scotland spokesperson said around 5:05 on Thursday, 19th of October, police received a report of a one-vehicle crash in which a tree struck a van on the B9127 at Wig Street near Forfar. Emergency services attended. However, the 56-year-old driver was pronounced dead at the scene. Next of kin have been informed and a report will be sent to the Procurator Fiscal. The road remains closed. Of course, our colleague Caterina Vitozzi was in Forfar yesterday and the weather did look extreme, to say the least. Well, there have been more jitters on the bond markets this morning, as Simon French was saying a moment ago. That was after Jerome Powell, the chair of the US Federal Reserve, indicated last night that US interest rates will remain higher for longer. The yield, which rises as the price falls on a number of government bonds, remains at multi-year highs. And this morning, I can tell you, the yield on 30-year UK gilts today hit 5.119%, which is a level last seen in September 1998. Well, on the equity markets, after last night's falls on Wall Street, there were further declines in the Asia-Pacific region overnight. There's the picture. As you can see, all the main indices in the region fell. Chinese stocks fell for a third straight day to complete their worst week so far this year. Well, in Europe, it's a similar story here this morning. Stocks in Europe heading for their worst weekly fall in 3 months. Talking points today include L'Oréal, which is off 1% in Paris as quarterly sales missed their forecasts. Well, here in London, trading appears to have returned to normal on the London Stock Exchange after last night's outages. The FTSE 100 currently off 0.9% in a broad-based sell-off led by the banks and the mining heavyweights. The biggest percentage faller is Intercontinental Hotels. I think the numbers came in slightly shy of expectations. The share price there off by just over 3.5%. Another big faller to mention this morning is Admiral. That's off 2.5%. The insurer, it hit a year's high yesterday, so I suspect there's a bit of profit taking going on there. There are not too many gainers to mention, but the gold miner Endeavour Mining is ahead by some 1.5% right now. The yellow metal hit a 3-month high this morning. On the foreign exchange markets, well, the big talking point is that the Japanese yen has hit the symbolic level of 150 to the US dollar for the first time since the 3rd of October. A bit of safe haven buying in the dollar right now, and there's been selling by a number of central banks as they seek to defend their currencies. They include the Riksbank in Sweden and Bank Indonesia. Well, sterling's off 0.1% against the greenback. It's off by 1/6% against the euro. The single currency, meanwhile, up by just under 1/10% against the dollar. As for the oil price, well, that is poised for its second consecutive weekly gain. A barrel of Brent crude will currently set you back $93.50 a barrel. That's up just shy of 1.25% on the session. Joining me this morning is Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, good to see you this morning. We were talking with Simon French about the retail sales figures, and it has played out in the market today. We've seen a number of the retailers coming off on this.
Hi, good morning. Great to be back. Yes, indeed. I mean, we've seen JD Sports is down over or close to 3%. Next is down over 1%. And really what this is telling me is, perhaps unsurprisingly, these sales figures, so down 0.9% back in September, which is significantly worse than expected, is really playing out in the market. As you say, what we are seeing, unfortunately, is really quite a steep reining in of non-food sales. So that's exactly what it says on the tin, which is those discretionary items. And a great deal of the UK economy is actually geared towards that kind of spending. So absolutely, we are seeing this feed into the anxiety this morning, and it's playing out across the FTSE and the retailers in particular, unfortunately.
Sophie, what about intercontinental hotels? I mean, the numbers on the face of it look pretty good. Had they fallen shy of expectations?
This is the big conundrum this morning. So as you were mentioning, Intercontinental Hotels Group, owner of Holiday Inn, the Crowne Plaza, their trading statement was actually quite upbeat and really pretty much broadly in line. And that main outlook side of things that people were looking for in terms of occupancy didn't ruffle too many feathers, and occupancy as well in the period has been really close to pre-pandemic levels. But a reason that we're seeing the share price struggle a little bit, one theory is that there's been some comments made about their short-term financing and how that's going to affect the room pipeline and their ability to develop new hotels. And we can take that to mean the higher interest rate environment is potentially causing them to hit pause or rethink. But also they haven't hit the refresh button on the buyback, which a lot of people were expecting and hoping them to do. So those things in aggregate, coupled with this difficult discretionary trajectory that the retail sales are telling us about as well, have all come together to create quite a negative share price reaction this morning, unfortunately.
Yeah, as you say, still a fundamentally well-run company. And what about Deliveroo? They had figures out yesterday that caught your eye.
Yes, Deliveroo is a really important one to watch when we're trying to gauge the consumer mood. Now, Deliveroo, obviously the takeaway giant, really their guidance has been maintained, and they're seeing a rebound in order numbers. But within that, there is still a struggle going on with trying to convince people to part with their cash. So they've seen total orders fall 1%, although gross transaction value is up by kind of mid-single digits. Perhaps unsurprisingly, part of that is coming from higher prices. Now, really, in total, Deliveroo is doing pretty much all it can. I think they're benefiting from people wanting to stay in at home more. They're not going to go and spend out at a restaurant, but they might treat themselves at home. So that's a captive market there. But really the path to sustainable profits and sustainable cash flow in particular for this company is still, for me, really quite lumpy and still quite a lot to monitor.
Now, as I mentioned, the oil price is going to complete a second week of gains here. How do we untangle the supply and demand fundamentals from sentiment towards oil caused by what's happening in the Middle East?
So unfortunately, a lot of this is down to the actual number crunching and looking at the lack of supply in the market. And a lot of this was happening before the tragic events and the conflict going on in the Middle East. We've already seen the main production cartels have actually turned around and said that we are going to be losing millions of barrels a day in oil. And coupled with that, the demand picture is also very uncertain. Now, the problem that's really kind of spooked markets at the moment does boil down to this conflict in the Middle East. There are increasing concerns that if Iran were to become involved, what that could do to the oil price is really quite stark. You could be looking at over $100 a barrel, $100 a barrel again, which again is that symbolically very important level that people don't want to cross. And for me, it's after that point at which the market starts to really become quite sentiment-led rather than fundamentals-based.
OK, Sophie, we have to leave it there. Good to see you as ever this morning. Thanks very much indeed.
Thanks.
Still to come here on Business Live, how the group behind the ChatGPT chatbot is saying came to be worth $86 billion. Don't go away.
Evacuation, you must leave!
For many people, Harvey is far from over. Christchurch has been changed forever by what happened here.
There was a river of blood coming out of the mosque. That's a scene that you don't forget.
Ida has certainly left its mark on New Orleans.
It just feels heartbreaking.
We help you understand the world with us. We are standing on the supply line right into the heart of America's opioid crisis. I've reported from around the world and around the UK. Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who've made accusations, Sir Philip?
Can you go away?
Joe Biden knows the celebrations are over, and this is a country in crisis.
You don't want to be remembered this way. You always want to be remembered as something positive.
It is almost impossible to predict where these fires will go next. This gives you an idea of the strength of those winds, strong enough to bend and twist metal.
Do you regret the tweet, Gary?
There's no sign, publicly at least, of either side being willing to give ground. How do you reassure the public that all of these mistakes wouldn't be made again? I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
The press preview, a first look at the front pages as they arrive.
There's a feeling amongst some commentators that it's not the most respectful timing.
I think there's a word for it, fake news.
I mean, it's wow, wow, wow from Harriet. Delving deeper into the stories with different perspectives on tomorrow's headlines.
We really haven't seen the government getting round the table and negotiating. There are no easy answers to those questions.
The press preview delivering you tomorrow's news tonight on Sky News.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Welcome back. Just a little bit of breaking news to bring you. The Prime Minister has put out a tweet on X, formerly known as Twitter, in the last few minutes after meeting the Emir of Qatar. He says, "We welcomed progress on opening up humanitarian access to Gaza. We will continue to work together to help secure the release of hostages and prevent the escalation of violence in the region." OpenAI, the San Francisco-based group behind the ChatGPT chatbot, is reportedly in talks with investors about a possible sale of employee shares. The sale is said to value OpenAI at $86 billion, nearly 3 times as much as it was valued when in April this year it raised money from investors, including Microsoft. Well, joining me now to talk about this is Isabel Asher-Hamilton, senior reporter at The Daily Upside. Isabel, welcome to you. How on earth do you value something like ChatGPT?
I think you see how much the investors are willing to pay. When you're OpenAI and you're really leading the way, because they're the ones that sort of started the whole hype cycle we're currently in to do with generative AI, then they can really sort of set their terms.
But obviously its investment costs are enormous. It's going to be loss-making for a number of years. I mean, normally an investment value is the sort of value of future cash flows, and it's just impossible to sort of work that out, isn't it?
Absolutely. We're in completely new territory. It's very hard to predict exactly how much financial value this kind of AI is going to bring in the future. But they are already sort of ramping up their revenue. I think there have been reports they're on track to hit $1 billion in annual revenue. So they can do a little bit of projecting for now, especially since they know how high their costs are going to be.
Now, why are existing employees looking to sell just now?
Well, I think we don't know whether or not they're actually going to sell that much en masse, because if you're an employee at OpenAI, I mean, it's a lovely incentive, being able to sell your stock now and get a really nice bonus, but also you might want to hold on to it because the company could well become more valuable.
Well, quite so. I mean, what I find really interesting is that Sam Altman, the founder and CEO, doesn't actually have what he calls a material holding in this business.
No, well, the history of OpenAI is a bit unusual. It used to be a non-profit, and it was started by a group of people, including Altman, and Elon Musk was one of those co-founders as well. And it was meant to be sort of highly research-based and to do with sort of AI ethics. It switched to a sort of capped profit structure in 2019. But I think for Altman, it's really, money isn't exactly what he's after, if that sort of makes sense. He's already fabulously independently wealthy.
Yes, he always has enough money for this life and the next one. What about the competitive threat, though, to OpenAI? I mean, it seems to me that Google very, very quietly are making big inroads in this market. They're stealthily incorporating AI into their search functionality. Are they ultimately the main competitor?
I wouldn't say it's all that stealthy. I think they would quite like a bit more noise, but ChatGPT takes it all up. They are not the only competitor. Pretty much every big tech firm has got some kind of rush towards generative AI at the moment. Meta is working very hard on it. I would be surprised if, for example, Apple isn't working on doing something. They're a lot more quiet. But there's also startups. There's a startup called Anthropic, which is actually run by a group of OpenAI alumni and recently attracted investment from Amazon, and it's already been invested in by Google. So, yeah, OpenAI can't really afford to relax.
OK, Isabel, great to talk to you this morning. Thanks very much indeed. Got to leave it there. That's it from me. I'm back at 4:30 this afternoon with our afternoon edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Samantha Washington. See you later.